Hello everyone, welcome to Just Invest Today. And today we are talking about JD.com and a huge catalyst I can see for the stock at least going to 110, 120. And I still think that's undervalued for JD.com's stock. But before we get into it, guys, can you please like this video, subscribe to my channel. I'm going to be providing you guys with a lot of good content. So man, JD.com has had a nice little run up around like 11% from $77 November 9th. And that's just showing you, I think the angle of the China FUD and all the fear is kind of switching momentum a little bit. And that's what I'm kind of seeing, man. So hopefully that keeps up and that keeps going strong because we need these companies to make these huge runs by the end of the year. And I think it can happen. Because honestly, 120 for JD.com is undervalued. There's no doubt. 120, that's still an undervalued stock. I still think it's cheap at that price. And it's selling for $85 because, guys, we all know it's a Chinese stock. So let's get into some of the business, man. So JD.com, man, look at this. It's the top retailer in China, basically, growing at 30% a year from 2016 to 2020 on the terms of revenue. That's how much it's generating compared to Sun Alibaba retail initiatives, which kind of is a little cheap because, Alibaba doesn't have its own products like JD.com has. Remember, because JD.com is more like Amazon. So what it does is basically it gets all its products from suppliers and then sells it to its consumers, right? So that's what they do. Same thing with Amazon. They get all the products and then they put it on their store and then people can get it. So JD.com has a lot of inventory, unlike Alibaba, which doesn't have inventory. So that's how they can say it's more of a retailer. And that's comparing it to Amazon and Walmart. So look at that. Amazon, in terms of revenue, is not even the biggest. Still, it's Walmart. But think about it. It's growing at 31%. And that's how you can compare it to JD.com growing at 30%. And China's market is growing way faster. And you think about JD.com, it's only in China. It's not even anywhere else yet. And then boom, JD.com plans to boost overseas investment as China's e-commerce giants looks to challenge Amazon. So if you watch this video, the executives want to move not just in China, they want to move away to other parts. So can you imagine JD.com, if they can do this? That's kind of a risk though, because we don't know how good JD.com can do what they're doing in China overseas. So that's gonna be a huge risk. But they've seen so much success with Singles Days, and they believe they can actually expand overseas and do what they're doing in China and other places. So guys, if they can do that, the opportunity for JD.com is just mind-blowing right now. Just look at all the momentum of JD.com. Revenue growing 33%, compounded. That's really unheard of. And it's only selling for a 24 PE, growing that fast. But the thing about it too is that JD.com has low margins because it has a bunch of inventory. But even though they have low margins, only at 7.5%, they have low capital, return on capital, and return on equity is better. But when you think about it, the retailing part of it, they're gonna grow and grow, and they're gonna get more purchasing power, building out economies of scale as they pretty much buy more products. They're gonna be able to actually get better deals and then put all those deals onto all the customers, getting way more satisfaction from the customers, determining the price, and just continue that economies of scale as they get bigger and bigger and bigger in China. So that's a huge thing. And one thing about JD Retail is people understand and know that all the products are real. JD.com makes sure, because they get the inventory, they can actually see it, sift through it. Look, they make sure the products are real. So people in China actually trust JD.com more than Alibaba and PDD are getting real products, getting real stuff. Because look, they have high products. They sell phones, everything. So it's basically like Amazon. They sell high quality stuff, and that's what they're kind of lay their head on and say they sell high quality stuff, and that brings up crazy good moat because people can trust the brand of JD.com more than Alibaba, more than PDD. And then on top of that, they are actually going down and they have a new initiative called JD Jinx, and they're selling it to the lower tier cities, and they're seeing crazy growth on that, like 30-40%. People are adopting going to the lower tier cities and selling. As JD's Jinx gets bigger, plus JD retail, we still have to remember that the market is still growing at 7.8% year over year, and they still have a 10%. They're continuing going on to 2020, 2023, 10% online growth in the retail market. So they still have a long way to go. That's what I love. The company is in a space, in the e-commerce space, that has so much potential still growing just in China. Not even talking about overseas, as you just saw that they have potential to growing overseas as well. So just looking at that angle, we can see that JD.com is just ripe to explode soon, as well as Alibaba and PDD. But that's not even the strongest aspect of JD.com. We gotta be looking at JD Logistics. JD Logistics is what sets JD.com apart from PDD and Alibaba, man. They have all their own fulfillment, all their own warehouses, man. And this builds the moat of just faster shipping, convenience in every tier city. They're almost at every tier city, just crazy speed of just providing fast delivery, last mile reach. They even have drones in some parts of China delivering products. So that's why I love JD.com, because they're building a huge moat. It's almost like the same thing as Amazon. You see what Amazon's doing? Like, they're building their whole infrastructure. So now they have a marketplace where people are actually selling products. Like, third party people are selling products on JD.com, and JD.com uses that and they can ship it out to other people. And they're doing the same thing, man. So JD.com has the logistics and the retail, the marketplace. Now they have JD Health. They have like a management to JD Manage. They have a lot of stuff going for JD.com. So guys, I am super bullish on JD.com. I think this catalyst is gonna earnings. Remember, guys, earnings is coming up on Thursday. JD Jinx is coming up on Thursday. I feel like this is gonna go out. This can go up to 110 quickly, man. A lot of opportunity here, and we see total active users growing at the same time. There's so much potential. So you just have to remember that there is risk with JD.com. We already know the whole China stuff, this whole China issue. Are they gonna go to war? Are they gonna fight with USA? That can have a whole new perspective on JD.com. It might be uninvestable if that stuff happens, but in my opinion, that's a low risk, and I don't see that coming to fruition in 5 years. Like, I don't know, maybe it can. So that's why you gotta kind of just understand your portfolio and what you're doing, man. So that's the main risk I see with JD.com. I still feel like JD.com is going to grow, and it has so much potential. So guys, tell me what you think about this video. Are you a bull or bear on JD.com? Like this video, subscribe to my channel, and I'll get back to you in the next video. Peace!